We're seeing insider trading activity picking up, with notable peaks in ES futures showing that big money is positioning for a move. As Q3 wraps up, new IPOs are at record lows. Normally, market peaks come with an uptick in IPO activity. However, this data suggests that we're not near a market top. Net sentiment is shifting into greedy territory, while Goldman Sachs is forecasting that company buybacks will hit record highs in 2025. And looking at the election year cycle, history tells us we're due for a correction. The question is, will the markets follow this decade-long trend? Hey, I'm Alex. Welcome to Future X Present, where we dive into the real-time market context and build a narrative around what's happening right now. By blending current price action with historical data and technical analysis, we'll shape a clearer picture of our next trade. Whether you're here for key setups, strategies, or just a deeper understanding of today's market moves, this is the place to add more value to your trading. Since last Friday, we've been in a consolidation range with highs around 5795 and buyers stepping in near the lows, as shown by the lower wicks. Zooming out, we're forming a flag pattern, but that recent failed breakout above resistance could be a red flag for the bulls. The NQ story is similar, but weaker compared to ES. While ES is flirting with all-time highs, NQ hasn't even broken its 78.6 retracement from the August lows. NQ is currently stuck in a weekly channel and recently rejected at 2500, which aligns with a daily fair value gap midpoint and a channel resistance. Key support levels are 20,000 and 19,915. Before going into technicals, let's look at the macro data for this week. Monday, we have Powell speaking at 1:55 p.m. Eastern Time. Tuesday, we have the ISM and jobs opening data. Thursday, we got jobless claims and PMI. And Friday, we're ending it with NFP and US unemployment rates. The last big move in ES was a breakout from the range that quickly failed. On Friday, ES attempted to push higher but reversed lower, closing at the day's lows. That failed breakout signaled to me that the market might be targeting lower levels. If the current trendline breaks, I'll first target 5776. The reaction here is crucial. Forget a weak bounce or some chop. I'll short to 5763 and potentially hold runners to 5745. While I remain bullish overall, Friday's failure to close above 5795 had me neutral going into this week. For me to go long, I need to see a breakdown and a quick recovery. If we break below the trend line but recover above 5790, I'll start with a small long position and add more if it holds. Upside targets are 5815, 5828 and higher. So take those levels, take profits there, and let the runners run. That's it for today's episode of Future X Present. If you found value in the analysis, make sure to like, subscribe, and hit the notification bell so you don't miss out on the next deep dive into the markets. Let me know in the comments how you're positioning yourself this week. I'd love to hear your thoughts. Stay sharp, stay informed, and as always, trade smart. See you in the next one.